host Nick Toka. On today's show, Bitcoin strengthens against Magnificent Seven stocks as Wall Street quakes. Arthur Hayes predicts 70% Bitcoin dominance as Bitcoin whales hit peak accumulation. Also, Bitcoin gearing up for explosive upside move amid short-term bottoming process, says Swissblock. All this and so much more on today's show. Welcome, folks, to CryptoNews Global. I'm your host, Nick Toka. And Bitcoin took a bit of a pounding last night. I saw it go as low as 75,000 for a couple seconds, but back up at 80K as we speak, currently showing up 2% for the 24-hour period. Let's get right into our market watch and Bitcoin technical analysis. We've got the biddy. As I mentioned, 80,368. Solana, $110, up 3.5%. Ethereum, down 1%, 1584. XRP, down 0.75%, $1.91. Doge, up 1.5%, 15 cents. Checking out the crypto bubbles. First, let's go into our hourly view, and you'll see that practically everything's in the green for the hour. For the day, which accounts for a 24-hour period. Also, everything up. I mean, we've got Fartcoin. It looks like the memes are back in town. Interestingly enough, Fartcoin up 22%. Grass up 17%. Tau 11%. Hype up 12.5%. For the week, of course, we've got a bunch of redness. 95% in the red, including Trump coin down 21%, JTO down 30%, TON down 25%. Zooming out to the monthly, crazy. We've got Fartcoin for the monthly up 134%, by far the big winner, and EOS up 45%, but pretty much everything else in the red for the month. Current market cap for Bitcoin is $1.6 trillion. Ethereum, 191 billion. XRP, 112 billion. Solana, 57 billion. Doge, 22 billion. Tron, 21. Make that 22 billion. And Cardano, 21 billion. The total market cap right now is $2.51 trillion, and the total Bitcoin dominance is 63.6%, holding steady there. Ethereum dropping more, 7.6%, XRP 4.5%. Crypto Fear and Greed Index brings us at a 24 in fear today. Yesterday was a 23 in fear. Last week was a 34 in fear. There are 1,101 days left until the next Bitcoin halving in 2028. There are 158,579 blocks left to mine until that time. The total assets globally are gold at 20 trillion, Apple at 2.7 trillion, Microsoft 2.6, Nvidia 2.3 trillion, Amazon 1.8 trillion. Saudi Aramco 1.7 trillion, silver 1.7 trillion, Bitcoin 1.6 trillion, Facebook 1.3 trillion. You can currently get 1,246 satoshis for one fiat US dollar, and the US debt clock shows us that the current up to the minute national debt is $36,697 billion. Equaling to $107,287 per U.S. citizen, or $323,048 per U.S. taxpayer. Looking at the Doge, Money Clock, how much they saved. They're currently at $292 billion. That equals to $2,600 per U.S. taxpayer. That's up about $40 from yesterday. So good old Elon saved everybody $40 from yesterday to the day. The day before, he had saved, I think it was $60 each on Sunday. So interesting how one clock keeps ticking up, the debt clock, and then the other clock keeps ticking savings. And, you know, that's the person that everybody seems to hate right now. So kind of interesting. Bitcoin took a pounding yesterday. It literally was the lowest I've seen it in a very, very long time, over a year. But it was very quick-lived and jumped up almost immediately back up to the support level, 78,000, currently at over 80,000. What's interesting is the Japanese Nikkei, I was just checking, it was down over 6% yesterday, and today, which is tomorrow, Tuesday at open bell, they are actually up 6.5%. The Hong Kong Hang Seng, I believe it's called, was down 13% yesterday, Monday, and currently is up 2.3%. So we might see a big swing in the U.S. markets when they open tomorrow. Nikkei currently up 6.5%, so it's actually up even more from the open. Bitcoin also strengthens against the Wall Street stocks, the Magnificent Seven and Wall Street Quakes, according to the article here. The leading cryptocurrency has been holding near its election day price, while the world's most valuable tech stocks have wavered. Bitcoin's price may be hovering close to a 5-month low, but U.S. President Donald Trump's tariffs have hit the country's largest tech companies harder. Since November 5th, the largest cryptocurrency by market value has strengthened against the Magnificent Seven, a group of NASDAQ firms including top tech names like Apple, Nvidia, and Tesla. These are the stocks that we actually go through every day. All right, 1, 2, 3, 4, 5, 6. Not this one. 6. And Tesla's in there. So Apple, Microsoft, Nvidia, Amazon, Google, Facebook, and Tesla, I believe, are the Magnificent Seven. On Monday, one Bitcoin was worth around 1,993 shares of Round Hill Magnificent Seven ETF, MAGS, which offers equal weight exposure to the group of 7 firms. A year ago, one Bitcoin could have bought 1,756 of the exchange-traded fund's shares when it was worth $69,000. So this is simply showing the difference between how many of these shares, this ETF, you could buy. So a year ago, it was 1,750. And as of whenever it said today or a couple days ago, 1,933 of these shares. So it's up against really all of them if you add them all together. On Friday, Matthew Siegel, head of DigitalAssets research at asset manager VangX, said the ratio had reached an all-time high on X, formerly known as Twitter. I've been telling clients for years to use Bitcoin to hedge FANG exposure, he added. I'm not sure what that acronym is. Referring to a popular acronym for mega cap tech stocks, Meta, formerly Facebook, Amazon, Apple, Netflix, and Google. So there's our FANG. So Netflix, interestingly, is in that mix. I thought Netflix stock was actually tanking, but could be wrong. Bitcoin's relative strength against Magnificent Seven stocks was at its highest level within the past year. On Monday, rising 13.5% 5% over the course of that period. Despite Bitcoin recently trading like a tech stock, some market participants view it as a sign of divergence. In past market turmoil, Bitcoin has had a mixed track record of providing short-term protection. Bitwise senior investment strategist Juan Leon told Decrypt, "Is this the turning point when it starts to shine as a resilient short and long-term store of value?" As the President Trump has pushed forward with his trade war, U.S. stocks have weathered their worst stretch since the onset of the coronavirus pandemic. On Monday, the S&P fell for a third straight day and has dropped over 10% for the week. I actually thought it was more than 10%. Bitcoin's price fell as well, as low as 74,600 on Monday, setting a new low for Trump's second term, according to crypto data provider CoinGecko. While the S&P 500 has given up its post-election gains, Bitcoin is still changing hands above its election day price of $69,000 on November 5th. Compared with historical macroeconomic shocks or crypto market cycles, these are not record-setting drawdowns, Thomas Perfumo, Kraken's global analyst, told Decrypt. The asset class has weathered worse and historically emerged stronger each time. And this is what I think we all should be looking forward to. And I agree that it will weather the storm too, and it will emerge stronger. In fact, I have some further stories specifically about that. Arthur Hayes predicts 70% Bitcoin dominance as Bitcoin whales hit peak accumulation. Now, we keep seeing every day when we go into the crypto dominance here, we talked about it just a moment ago, Bitcoin now is at 63.6% of the total crypto market cap, which is definitely up. Normally it's hovering, look, last bull 4-year cycle, it was down around 50%. Now we're up to, most of the time it's been around 60. Ethereum was, 10 up to even 13% at one point not too long ago. Now down to jack all, right? 7.6%. Bitcoin 63.5%. So Arthur Hayes predicting it's going to go up to 70%. Bitcoin bull and BitMEX co-founder Arthur Hayes has shared that Bitcoin's dominance in the cryptocurrency market will continue to rise. The BitMEX co-founder revealed in a recent tweet that he has been avoiding altcoin investment despite their decreasing prices. Arthur Hayes predicts Bitcoin dominance increase. Arthur Hayes has taken a clear stance on the current market situation. He's actively adding to his Bitcoin position while avoiding altcoin investment. Hayes also spoke about the potential interest rate cut in the U.S. and explained how it could happen in one of his recent tweets. In his recent tweet, BitMEX co-founder stated, "Been nibbling on BTC all day and shall continue. Shitcoins are getting in our strike zone, but I think a Bitcoin dominance keeps zooming towards 70%. Here's his tweet. So we are not gorging at the shitcoin supermarket. Remember, money printing is the only answer they have. But folks, there's going to be substantial money printing coming up soon. Now, I agree with him in one respect. You want to, stay clear of this shitcoinery. You could get wrecked with it. Bitcoin's definitely the right play. But, I always say take 5%, put it in some shitcoin. Hopefully, you find one that goes up, 2,000%, and you actually get a very, very nice return. Arthur Hayes specifically pointed to monetary policy as the driving factor behind this bullish Bitcoin outlook. He added, "So we are not gorging at the shitcoin supermarket. Remember, money printing is the only answer they have." Again, this comment suggests Hayes believes central bank policies will continue to favor Bitcoin as a hedge against inflation and currency devaluation. The 70% dominance target is a substantial increase from Bitcoin's current market share, which we just saw at 63.5. Such a shift would imply major capital inflows from altcoins back into Bitcoin. Sure, everybody's scared and they go into the safety coin, right? Whale accumulation reaches peak levels amid Arthur Hayes' Bitcoin prediction. On-chain analysts from Glassnode has identified a pattern of Bitcoin accumulation among the largest holders. According to their data, Bitcoin whales holding more than 10,000 Bitcoins has reached a nearly perfect accumulation score of approximately 1.0 at the month's turn. This means that there is intense buying activity for over a 15-day period. Whales holding 10,000 Bitcoin briefly hit a perfect accumulation score of 1.0 at the turn of the month, reflecting intense 15-day buying. The score has since eased to approximately 0.65, still signaling steady accumulation. Meanwhile, cohorts from 1 Bitcoin up to 100 have intensified their buying. While this peak accumulation score has since moderated to around 0.65, it still shows continued steady buying from these major market participants. This level of whale accumulation stands in stark contrast to the behavior of smaller Bitcoin holders. Glassnode noted, meanwhile, cohorts from less than 1 Bitcoin to 100 Bitcoin have intensified their distribution, all trending toward 0.1 to 0.2, a clear and widening divergence between small and large holders. So actually they're saying that the small holders are selling and the whales are buying. Let's just get that corrected from a second ago. And this difference in behavior between large and small holders often precedes major market movements. Historically, periods where whales accumulate while retail sells have preceded bullish phases in the Bitcoin market cycle. Bitcoin establishes support at 74,000. I wouldn't say that. It was there for 2 seconds. I would suggest that it has established support very firmly at 78.5. I haven't at 77. Pardon me. This I feel this 74.5 that it got to for a couple seconds is very much an anomaly and had to do 100% with all the traditional finance markets going down, and kind of Bitcoin finally had its falling out for a moment to catch up to what was going on into the traditional financial system, and it didn't do it during the week, but it did it during the weekend. Their analyst comes at a time when Bitcoin and altcoins have lost double-digit value in the past 24 hours. The data shows this price point aligns with the first major supply cluster below 80,000, over 50,000 and BTC at 74.2K. This supply zone is primarily composed of investors who were active in the market for approximately 5 months. The strength of this support level will be important for Bitcoin short-term price action as the market moves through its current volatility. If this support holds, it could be a foundation for a potential recovery toward previous highs. OKX partner Ted has highlighted a key technical level that could decide Bitcoin's next directional move. BTC is trying to reclaim the weekly 50-day moving average level. This has acted as a bull-bear line for BTC, Ted noted on X. If BTC fails to reclaim it, expect a correction towards 69 to 70K, and even the 67 sailor entry average could be retested. Now we're going to see over the next couple days, because we've already retested. Let's bring up the same chart that these guys have here, and let's zoom in a little bit. We already see that those levels that were hit here, 74.5, that was much earlier. We're already back to 80,500. We've got the bid and the ask at exactly 80,567 as we speak. So clearly, right now, look at this green candle here, right? Massive. There were some big dips coming in here, but not much. All I see is green as we speak, and quite a bit of it. So there was a definite support at this level. People took advantage, right? Unlike me, who, I didn't stay up all night for this, right? But there's certainly the people in the, Asia. It wasn't night for them. It was, middle of the day for them. So they certainly saw it at this price, and they jumped right in at, 74. What do we have? 74.3, and they jumped in and bought the dip. I bought the dip too, but I certainly, I bought it around this 78 zone in, Eastern time zone, daytime hours. According to his analysis, failure to reclaim this movement average could trigger further downside. He mentioned potential correlation correction targets 69 to 70,000. Yeah, I feel like I've said it many times. Every time we get near this 77,000, 76.5, 77,000, 78,000, support definitely seems to jump back in, and we pump. People are just waiting for a sale. I keep saying it all the time, guys. Buy the frickin' dip. And I hope a lot of you did. I jumped in and bought the dip a little yesterday. Not much, right? But everything counts because you're buying it at a discount. So it brings your average cost down is what it does. So I'm not the only one who thinks that we're in for a big move to the positive. There are analysts who are predicting Bitcoin is gearing up for an explosive upside move amid short-term bottom process, says Swissblock. Right? So it's not some shithead analyst like Swissblock, right? Prominent crypto analyst firm Swissblock says one key metric is suggesting that Bitcoin is in the midst of carving a major market bottom. Swissblock says on the social media platform X that it's keeping a close watch on the Bitcoin Fundamental Index, BFI, a metric that combines liquidity and network growth. I do know that the hash rate is currently at all-time highs, so generally the price follows the hash rate. So I'm going to try to find some charts on that for everybody tomorrow. According to Swissblock, the BFI is strengthening, indicating that the steady entry of new market participants who bring fresh liquidity into Bitcoin network. Bitcoin is signaling a bottom, not the end of the bull market. The bottoming process in its final stages with an explosive move likely next. BFI is telling us what is next. BFI is strengthening, crossing the green line. It turns bullish. So right here, Swissblock says that Bitcoin's liquidity conditions need to rise a little higher to confirm a massive bullish reversal. Once liquidity crosses the 50-day 50 threshold, the shift will be abruptly bullish, leaving little room for the bears to react. Network growth versus liquidity. Liquidity at 44, network growth at 77. So this is what I was talking about a moment ago. The network, this should end up following the network growth. And you see that the charts are diverged a little bit here. They seem to be pretty close. And the only other time we saw this, look between July and October last year, almost immediately right after that, the Bitcoin price jumped quite a bit to meet the network growth and the network supply. So, we're talking a huge jump. If it's going to go and meet this mark again, we're talking like, I don't know, 100%, it looks like. Based on Swissblock's chart, Bitcoin's liquidity level is hovering around 44. According to the analyst firm, the bullish outlook on BTC is supported by the surging M2 money supply, which tracks the total money amount of money in circulation within an economy. Yeah, we talked about this, and let's actually bring up that chart here. And we've got this is the US M2 money supply. I don't have the global money supply, but I do know that China and Europe will also be printing a lot of money. So here we are. You know, it shows us as far as February, and it's kind of just continuing to grow here, up and up and up and up and up. So this basically means money printing, right? The higher these lines are, the more money that was printed. In February, 22 US billion. So what is that? $2 trillion was printed? I think that's what that means in February. Interesting. Not good, but interesting. This aligns with the growth of the M2 money supply. Bitcoin has been lagging that growth, but it's catching up gradually. But while Swissblock is bullish on Bitcoin, the firm notes that it is still within the realm of possibility for Bitcoin to witness another sell-off event. Yes, in the short term, the bottoming process is underway and entering its final phase. What comes next is likely an explosive upward move. And yes, another breakdown is still possible in the short term. In terms of price, it would represent an entry point for new participants and more liquidity into the system. So they're basically saying it's a good time to buy. And when they wrote this article, which is clearly in the middle of the night yesterday, or maybe they're in Europe or something, the price of Bitcoin was at 75K. So up, you know, $5,000 from that time. Actually, now almost $6,000 just from the time we started the show until now. Price was up $500. So we do see some good things trending. There's been so much good news with the Bitty. So much good news over the past 2-3 months. You know, nation state adoption around the world. Strategic Bitcoin reserve from the U.S. You know, banks starting to offer loans against your Bitcoin. Countries allowing you to pay your taxes. You know, Switzerland, France. We had the tram and the subway and the streetcar and the buses allowing you to pay now in Bitcoin. States, individual U.S. states have bills. I think there's I think it's over half of the U.S. states have bills requesting to be allowed to put Bitcoin on their balance sheet in terms of a strategic reserve. This is on top of the government U.S. federal strategic reserve. So much good news. Price has gone nowhere. Now we've got the M2 money supply continually growing, money printing. This is definitely a bullish thing for Bitcoin. The less fiat money is worth, the more Bitcoin is worth, like just automatically, right? If Bitcoin stays at the same price because it is a static supply and fiat money, they print trillions and trillions, well, automatically Bitcoin will go up in price to offset those extra $1 trillion. It'll, you know, move in an opposite way. Lots of good things coming up, I believe. Certainly, it's still not too late to buy the dip. I said it on yesterday's show and I think on the day before, and I gave the example of, yes, I bought the dip. And, well, what do you do if the price goes down more? Well, you buy the dip again. and you're effectively just averaging down. So not too late, not long ago, folks, January. So 3 months ago, 2.5 months ago, the price was 110 grand, 109 and change. So 30,000 up from its current price. Things can change fast, and what we've seen from the charts is within a couple months, the price could certainly skyrocket to a very hefty sum. There's lots of money out there in the world, so go get yourself some. The way the whales are doing it, the way the big money is doing it through finance and doing it through investments and making their money work for them. So become one of these folks and go get some. There's $900 trillion of assets in the world. Lots of money around. Money is abundant. It's time that's scarce, so use your time wisely. Always spend less money than what you earn, so you always stay in the green. If you suddenly start making more money, start saving more money. Don't start spending more money frivolously, and start saving and investing when you're young. Ideally, you start when you're in your late teens, early 20s, and you can retire when you're 40 or 45 if all things go well. And if you've got a great idea, this might be your path to retiring early as well and investing more. Start this idea today. Even if you're not ready, jump on your idea, start, and things will slowly come together for you. Please, if you found this show and stream enjoyable, do share, like, comment, and subscribe, and we will see you on the next stream. Folks, thanks so much for joining.